All right. Crypto market update. In today's market update, I just going to do a quick recap on some of the stuff that's happened recently, um, and what my game plan is moving forward on this rally. So essentially, last Friday, just go down to the daily here. Last Friday would have been the 7th, which was right here, basically right there on the 7th. I cut out of my Bitcoin long, so right up here. Okay, this was it. Nice and early. See how early that exit was on that trade alert? Got a little bit chopped up here, admittedly. Got a little choppy. Got faked out. Right? A lot of people got faked out. Right? Went for a breakout. Got faked out. Cut it. Cut it as close to break even as possible. From that point on, we bled fairly hard on most of the altcoin markets. On Bitcoin, it was modest, right? It was very modest. But altcoins bled really hard. And fortunately, several weeks ago, I sent out a market report that I was cleaning up all my bags ruthlessly. And then when I sent out this trade alert, I says going into USD, and that I was also cleaning up all my altcoin bags. Right, so we had a bit of forewarning in time here to clean up bags before the major dump. Now, 2 days ago, I sent out a trade alert to buy a bunch of DEPs on altcoins, and I sent it out as a quick video. It was kind of like a generic alert that said, go coin shopping, essentially. Everything is deep in the red. And the reason why it was generic was a couple of reasons. All the altcoin markets right now are extremely correlated to Bitcoin. Very, very correlated. And in fact, unless there's some kind of special event on one particular market, like let's say Ethereum Classic or something like that, some kind of special news that generates enough hype and enough volume and momentum for one particular coin to have its own unique type of bull trend or bear trend, either or. Everything's highly correlated. So in essence, we're only really trading one market. We're only really trading Bitcoin. The difference is if you trade the altcoin bounces, you're going to get much larger percentage gains than just going for Bitcoin, because the Bitcoin range is very, very tight, as you can see, right? Small percentages, right? Whereas altcoins are getting massive percentages. So what was my reasoning? What was my rationale? Why did I feel like it was time to load up on altcoins and buy the dip? And you have to be adaptable. You can have technical analysis, you can have a game plan, but you also need to know how to read the markets live and adapt. Even if things don't go perfectly according to your plan. Right? What do I mean by that? Well, everyone was watching this line, including me. Everyone was watching this ascending line. Oh, when we break down, it's over. We're dead. Right? Okay. So we broke down, right? And what happened? Bitcoin stalled. Now, yes, there's definitely a very good point here. Ash is saying support, prior support could turn resistance. That's a very, very good point. Very valid, actually. We could retest this, and this is an area that we really want to watch. And all those altcoin buys that I did, I already stacked limit orders. Some of my sells have already been executed on profit, and some are yet to execute, right? Basically, I did that preemptively. I bought bottoms and I stacked sell limit orders so that, when the markets bounce, they could just all buy into my bags and then I'll be out. So if it rolls over and it turns into classic prior support turn resistance, then I'll be out. I'll flip into cash and let's do this all over again. Let's go for another round, right? Alternatively, it could break and snap up above this line. Right? And if it did something like that, then, it's possible we could see some resistance, maybe V bottoms hit some resistance here. Right? I'll tell you what I'm not going to do. I'm not going to hold a lot of Bitcoin before August 1st. I want to be well hedged into cash, right? Into USD. And probably do that sell into strength preemptively. And from here on in, my goal is to trade to accumulate more USD. That's my goal. That's my game plan right now, right? The reason for that is because when everything's all bullish, the name of the game is to trade to accumulate more Bitcoin. Whether you're trading altcoins, whether you're trading Bitcoin, it's like, get more Bitcoin. Bitcoin's like the reserve cryptocurrency, right? It's stable, store value, much more stable than altcoins. You can make big gains on altcoins, but when altcoins pop off and go really, really high, then it's probably a good idea to lock in some profit in BTC, something that's a little bit more stable. So, case in point, and I'm going to talk about August 1st and my game plan for that right now. Case in point, Bitcoin dumped, from here to here, it dumped 16%. Right? Altcoins bled out the eyeballs, 30 to 50% or more. Right? So this is a little bit more manageable. Now, obviously from the top, Bitcoin dumped 25%. Most altcoins, especially the Poloniex coins, a lot of them dumped 60, 70, 80%, right? So obviously Bitcoin being a little bit more liquid, being a little bit more stable, is a much more trusted store of value, even if it doesn't give you those immediate YOLO gains that we see in altcoins. Altcoins are great for trading, and sometimes if you pick the right one, good for investing on those YOLO gains or whatever, but you need to lock it into something, right? So as we approach possible bear trend, in my opinion, this is confirmation. It's still confirmation, even though we could dip our head up or, retest support and bounce. All right, so ultimately USD. The name of the game is USD, right? So in a situation like this, sometimes there's what I call paralysis by analysis. Sometimes traders can, because of their uncertainty or fears, sometimes they can try to overanalyze things too much. And the longer you wait, the worse your exit and entries are going to be. The more confirmation you wait for, like for some people, they didn't sell up here. For some people, they waited on the breakdown and sold everything here. Well, that I don't know. I'd rather be early and wrong than late to the party, right? I'm not shy about being wrong and being bold, right? So in this case, I was very bold and ruthless in cutting that off, and I sent out a trade alert, right? Update, market update. Now let's refrain from questions till I'm done. So I'm going to go into cash. Now let's look at a bunch of altcoins. Let us look at some of these juicy altcoins that we had recently on these bounce plays. Right. Oh, actually, and my reasoning for that is we also got multiple days of blood. So check this out. 3 days of blood, a bounce. 3 days of blood minus a pause, a bounce. 3 days of blood, a bounce. 4 days of blood, a bounce. 5 days of blood with a pause. 2 days of blood, pause. 3 days of blood, right? So after bleeding and dumping that much, even though we broke this trend line, because we didn't have an immediate washout, because, like we could have broke down and the price could have went like this. Okay, this is Bitcoin. This stuff can happen. The price could have gone like this. Boom. Right? And I was prepared for that. Right? I was kind of gunning for that. I was like, okay, you're going to break down. Let's do it. Let's rip this band-aid off. Break down. I'm ready for it. Give us the mother of bounce plays. Let's do it. And then it just kind of stalled. Did a lot of nothing. And then I said, okay, it's losing momentum here. Right? It's stalling out. And we've already bled for like 5 days practically. 4. And then we dropped a little lower. And then so that was Bitcoin, and I knew that everything was highly correlated to Bitcoin, which is why I was watching the Bitcoin markets, because altcoins at this point don't really have a mind of their own. They're little slaves to Bitcoin at this point, right? They were all so tough like last month. Oh, dethrone Bitcoin this, dethrone Bitcoin that. We're all in a bubble. We're the future of crypto, Bitcoin 2.0, and now they all get exaggerated. The market mover whales took profit, went away for summer holidays, and now everyone's got tick-lock staring at Bitcoin, just chasing the markets and dumping and buying based on the Bitcoin price, which is kind of ridiculous. But that's the way it goes. You just have to adapt to whatever the market. Sometimes it's inversely correlated. Sometimes it's highly correlated. Other times it's non-correlated. All right, so let's look. Oh, someone's saying CFI just went up. I'm just going to take a peek at that because I'm curious. All right. That's kind of cool. Probably testing, we'll probably test this line here. If we break it, then this would be like first sign of a reversal. Second sign of a reversal after we break it. Just do a green candle, would be a pullback and a retest of the line for a higher low, and then it could change directions. But it doesn't really matter to me. This is a long-term investment for me, so I don't really care. Even if it goes like this tomorrow, I'm not taking profit, right? Unless it gives me like a 10x tomorrow, like if this goes up 1,000% tomorrow, then okay, fine, I'll take some profit. Begrudgingly, I'll do it. But it's got to do something really stupid for me to want to do that. All right, let's look at some of my picks here. And I did an update and talked about some of these picks. No. I'm not going to sell out 50%. I have way too many to do that. It's a long-term investment, maybe like a few percent or whatever. Okay, so let's see. GNT. Okay, so Golem. This is a nice classic case of get the heck out and buy the dip. I like this play. This was fun. So, we broke down. Oh yeah, we broke down the larger trend. That's what I was looking at. Let's just go on a 6 hour here. Okay. Get some sensible charts. All right, so I don't mess around with these breakdowns. This is my rule. In case you haven't noticed. When we break a trend line, I pull the trigger. It's like, fine, we break it, we break it. I'm out. Peace. I don't wait. You know, it's like, oh, we broke the line. Maybe I'll just wait for support over here. You know, maybe I'll just wait to see if we break down this support over here, and then I'll cut out. And then you say, oh, it broke down support. I better dump. And then you dump in the bottom. Good game. Right? Game over. Right? Paralysis by analysis. Be ruthless. Broke the line? Cut it. Dirty laundry. Toss it out. Get rid of it. Torch it in the bonfire. Let go of your attachments. I'm not married to Golem. I made a lot of money off of it. I had fun. I'm not married to it. I don't give a flying kite about Golem. Or most of these coins. Oh, but it's got the best tech ever, and the app, a developer update, and Insta-feed, well, whatever. I'm trading it to make money. It's all crypto trinkets to me. I like Bitcoin. You know, I like a couple of other coins. But, you know, as far as I'm concerned, this is all helicopter money that people just printed money out of thin air and then sold. You know, basically sold everyone their bags of free helicopter money that they created out of thin air. And now we're trading it to make money and speculating it. You think I'm going to get attached to someone else's helicopter money that they just created out of thin air? Right? But it's the future. Uh-huh. Okay. Anyways, so what ended up happening? And I'm giving you these analogies. I'm not trying to be cute or anything with these analogies. I'm actually trying to teach a lesson and a mindset to be in and make it entertaining for you guys. Right? This isn't about me and my trades. This is a reflection on for other people to be able to learn, right? And if sometimes I come across as a bit cynical or snarky about it, it's because there's a lot of Kool-Aid in the industry, and a little bit of cynicism is going to keep you solvent. Right? A little bit of skepticism can go a long way. Right? When everything's all about drinking the Kool-Aid right now. Okay, so this was definitely a nice little bounce play. Did I nail the exact bottom on this? No, actually. I was a little bit early, right? So I got in on this bounce right here, and it dropped. And it dropped. Nick saying the Kool-Aid man's actually filled with blood. It dropped lower, right? So it dropped a little bit lower than my entry. So when I saw that, I completely panicked and cried myself to sleep all night. No, I did nothing. I did nothing. I just held my bags. I was like, okay, well, I still think it's going to bounce. It's fine. I mean, like, listen, are you really going to nail the exact bottom of everything? Do you really expect to nail the exact bottom of your dip buys? You know, flawless execution like a sniper on every single dip buy that you ever buy? Sometimes. I did it on MadeSafe the other day. That was nice. But sometimes not, right? Sometimes you go and you buy a dip and it drops a little bit more and then you're in the red. Right? But you have to give yourself wiggle room. You have to have wiggle room. Right? Like I was actually like in the red, you know, a good 15% on that dip buy. Now I'm in profit. Because this is where my strong hands come in. Right? I'm not in with the cats up here. Strong hands, strong hands, strong hands. You know, buying dips doesn't have the same flavor when you're holding a bunch of bags that are bleeding, does it? Buying dips has a much sweeter taste when you're sitting in USD. So not every single dip buyer that you see actually sold higher and is buying in lower for the bounces. There's some that are just cost averaging down or buying dips, but they're bleeding out the ears on prior bags because they were preaching strong hands, strong hands, strong hands. And it's like, well, there's a fine line between strong hands and bag holder, right? That's a very, very fine line. And sometimes you have to have strong hands and ride the trend, and sometimes you have to be ruthless and just cut it. Just, take your coins, put it out back in the bonfire, light it on fire, and just cut out. Come back, reset, wait for the green vegetation to reset, buy the dip, and the forest shall regrow after the fires, right? It's natural cycles of life. Right? It's simple, and I speak in metaphor because you see this everywhere in life. It's the yin and yang. It's the day and the night. It's the winter and the summer. It's the up and the down. It's the hot and the cold. Right? It's everywhere. Natural law principles. Right? There's certain types of trees like the jack pine that will only blossom under intense heat from a forest fire. There are certain types of trees and vegetation that will thrive off of the burnt forest fire. Be a jack pine. Be a shark. When there's blood in the waters, come in for the feasting. Right? Don't be the prey. Don't be the one getting feasted on, right? It's a different mindset. Right? It requires courage. It requires being a contrarian. Right? You have to be a contrarian. You need to go against your own nature, and that only comes with experience. You want to know how to become a good dip buyer? Go sell enough bottoms. And eventually you're going to learn your lesson and you're going to start buying some dips. Right? You want to learn how to cut out of a trade quickly, fast execution without hesitation and paralysis by analysis. You want to know how to do that quickly? Go bag hold for a little bit after a major dump like this. See how it feels. Right? These things come with experience. I can tell you the metaphors. I can give you my trade setups and stuff. Listen, I can hand you the most perfect, flawless trade execution. I could say I just came back from a time machine. I'm back from the future. Here's future Rocky coming to back. I can tell an absolute fact on a gold silver platter with diamond encrusted jewels on it, the perfect trade setup and execution. It doesn't mean that you're going to even execute on it or be able to manage the emotions or be able to do what's available. Right? It doesn't mean that. Because I can't teach you how to drive a car. You only drive a car by getting in the driver's seat and driving. And experience is the best teacher. You know who your best teacher is? It's not me. It's the markets. The markets are your best teacher. You're your best teacher. I don't know what's going on inside your head and your emotions. Well, I probably do, because we're all not that different, right? Human psychology is human psychology. I mean, we're trading human psychology right now in the markets right now. This is human psychology, what we're experiencing. This is art. Right? All right. So enough about that. Let's just talk more about these bounces and these trade setups. Bounces and trade setups. I try to mix a little bit because trading is as much psychological and emotional as it is technical and fundamental. There's the trinity of trading. You want to know what the trinity of trading is? Technical analysis, fundamental analysis, internal analysis, self-analysis. Right? A lot of traders don't talk about self-analysis a lot, do they? It's all about technicals and fundamentals, but self-analysis. Doesn't matter how good your technical and fundamentals are. If you've got no self-analysis, you can throw all of that out the window. Right? Exactly, Bear Claw, exactly. TA is like 20%, mental is 80. Absolutely. Couldn't agree with you more. It's a very minor component. This is just a map, right? But the internal analysis are the legs that get you walking the distance, right? A map is not going to get you from A to B, will it? You have to walk the walk. You have to make the movement, get up and move your legs, put in the effort. Sometimes it hurts. Sometimes you have to walk uphill and your legs get sore. Sometimes you get blisters on your feet or you're under the hot sun, right? You have to walk that journey. Trading is not easy. It's not easy. It's a very high level skill to be able to do it because of the internal self-awareness that's involved in it. All right, so let's talk about technicals. Enough of that psychobabble. Let's talk about some technicals here. So, okay, so usually a lot of times if I'm going for a bounce play, I will sometimes, like in the perfect world, and we could see this. Depends how ferocious we bounce, but in the perfect world, I would almost say that this up here, like it could bounce and in Y-cost market cycles, it could retest the prior support, turn resistance trend line, and come up kind of into that sweet zone, that retracement zone between 50 and 61.8%, right? However, I haven't set my targets up that high. The reason being is because these markets are all slaves to Bitcoin, and Bitcoin is going to test its trend line a lot sooner than a lot of these markets likely. So I just, when I bought my dips, I essentially just set limit orders, stacked limit orders, set and forget between 20, to 40, different range, like up here. So if I execute some and some others no, and that's it. Right? So there's one bounce play, GNT, right? I like that bounce play. In fact, I was able to buy back more of the GNT than I sold, which is actually a pretty good feeling when that happens. Other markets, Zcash. Oh, definitely. This Zcash is a beauty. I actually got to trade 2 bounces on Zcash. I got a 2-for-1 on this one. Basically, I had some USD sitting on Bitfinex because I hedged, right? When I say I go USD, I had some on Bitfinex, some on Kraken, some on Poloniex, some on Bittrex, some on Quadriga. I've got some Bitcoin on BitMEX for scalping. And the whole reason behind all of that is to diversify my risk. So if one exchange gets kicked in the teeth and takes a hit and hacked, I'm not out of the game. My trading capital doesn't get wiped out, right? So in a case like where Bitfinex got hacked and I took a 30% haircut, it was a 30% haircut on a fraction of my trading capital, which was just a fraction of my entire crypto portfolio. So Zcash was quite the beauty because I actually, I was up late at night and I was like, okay, I got to find some good Bitfinex coin that I can buy. And I literally bought the bottom, pretty darn close to the bottom. And, I was kind of frugal because it was actually my largest position size. So I went between like 5 and 15%. I stacked some limit between 5 and 15 because it was a larger size position. Woke up in the morning, had those executed. I was like, oh, sweet. Right? And okay, like 5 to 15%, it's not a lot, right? We're kind of spoiled. We've been getting 1000x, 500, whatever, not 1000. Yeah, 10x, 1000x. some liquid coins maybe. Nothing I've done at all though, but recently, but 10x, 5x, stuff like that, right? And we're spoiled. We're absolutely spoiled And we've been spoiled in the bull market, in the bubble. And everyone's a winner in a bubble, right? Everyone gets a certification, a certificate of participation, or a winner ribbon until the bear trend comes. And then the wheat is separated from the chaff. Not everybody gets to keep the profit. That's when people realize it's a zero-sum game, right? So 10 to 15% bounce on that. And then last night, I saw it made a higher low, just like Bitcoin. It followed Bitcoin. And I said, hey, let's do this again. Except this time, I set, I did it with half-size position, not the full size. Except this time, I stacked some orders, higher up, like 30% on that trade. Some limit orders. And I wouldn't be surprised if Bitcoin continues on its current oh, wow, Bitcoin. Whew. Nice little bounce there. I wouldn't be surprised if it continues on its trajectory to actually have it go into my limit orders. Do I have to? UBQ is another one. Thank you for reminding me. Let's look at UBQ. I like UBQ. I made some really good money off of UBQ, and I like UBQ. I like the developers. I like the project. It's one of my favorite kind of mid caps, and now UBQ is making me some more money, so I like it. And all right. So, UBQ, really nice bounce play. So how do you find these bounce plays? Just like I said yesterday, check it out. Right? Look at that. Boom! 78 on the nose. Doesn't get any more picture perfect than that. I mean, this is like a Kodak moment, folks. Take a picture. This is art. Right? Fibonacci. Right? The laws of the universe. This is golden. It doesn't get any more perfect and beautiful than this. This is so incredibly textbook. Go read some textbook on technical analysis and you're going to see this picture. Look at that. Came all the way down, 78% retracement, prior resistance over here, turned support. Even though this is some liquid mid-cap, it was still beautiful in textbook. I mean, this is golden. This is golden. What books I recommend? I was being metaphorical with the textbook thing, but Trading in the Zone is pretty good. I bought a bunch of trading textbooks, but I haven't really read them recently. I've got a whole bunch of books sitting on my shelf right now. I like to keep my TA simple. Factum, thank you. Thank you, Greg. Thank you. Factum was another beautiful one. Oh, yeah. Here we go. Here you go. Look at this. Not perfect, but it hit into the only bounces that I sold yesterday was Zcash, which I sold and got to buy a new dip, and MadeSafe, which I didn't rebuy into, but I bought the bottom and MadeSafe, and Made's probably bouncing even higher. And the rest never hit my targets yesterday. And then when I saw Bitcoin hit a higher low, I adjusted and set my targets up a little bit higher on some coins too. So I'm still might have some of them that have been executed. Factum, no, actually, never mind. You can see I set alarms close to my target area right here in Factum, so a bell will pop off right here, and an angel will get its wings when the bell rings, and then little dollar bills will come flapping its wings in through my office window. Okay, so that's Factum. What was another one? I bought some Digibyte, DGB. This one was just like nasty looking, and I started in, right? So if it pops this, I started in, and I bought in pretty darn close, not the exact bottom, but pretty close down here. So This is where it starts. And yeah, Strat's another one. Strat really, really bled. I mean, this one was, wow. Holy smokes. Now let's do a recap on Strat actually, because there was a little bit of a jump the gun a little bit too soon initially, but manage risk as mentioned in my market reports. So I had sent out a trade alert, and this is why, here's the thing, like, this is why it's important to never just blindly follow my trade alerts without fully understanding what it is I'm doing and setting your own risk management plan ahead of time. Because if you're waiting for an alert or a market report on when I cut out of things, you might get it too late. You might be sleeping, you might be at work, you might be this, you might be that, right? The timing might not be there for you, right? So here's an example. I went to take a stab at a dip as it cracked under right here, right? Right here. And we did have a little bounce, but it was a very, very weak bounce. Very weak, right? And then it flopped. Then I sent out a market report. In the market report, I said I cut out of Strat at close to a break even, right? This was kind of a weaker play. Now buying Strat down here, I didn't nail the bottom again. I didn't get all the way down here. This one I didn't cut out, and the reason being, and I'll tell you the reason. If you're gonna try to take a stab at a 61.8 on a semi-illiquid coin, when Bitcoin looks like it's kind of breaking down, the markets are highly correlated, then you need to kind of cut out a lot sooner. Or another way of doing it is to cost average down and have a larger one there. See, look, here's two ways you can do it. Two ways to manage risk. So risk management 101 for dip buys. You have two options and possibilities. You can cut it on the breakdown of support for a small hit, just like a jab to the chin type of thing, or as close to break even as possible. That's number one. Number two is you can cost average down on the next fib level, maybe even with a larger position size. I would say before you pick one of those two options, go out and practice. Play with small amounts. See which one works for you. If you're a busy person and you're not like me, and you have to go out somewhere or take a vacation, this and that, or whatever, and you don't have the charts open all day, and you're not able to cut in and out quickly if something goes south, then maybe just setting a larger order. You remember my win-win accumulation strategy back in the day? Maybe just setting a larger order at the next fib level is a good hedge, because if you had done that, check this out. Right now, if you had a larger order now and you a smaller order here, like let's say like a 33.66, or let's say it was just 50-50. If it was 33.66, then guess what? Right now you'd be in profit, wouldn't you? If it's the exact same order, 50-50, right now you'd be at break even. If you didn't feel comfortable in this current market position, you could exit right now for a graceful exit with no loss. Or you wait till it hits the next Feb line. This one gets cut out at a break even, and this one is profit. Boom. Graceful exit. No need to fear. No need to panic. Just understand market movement. Understand market behavior. Right? There's a reason why I don't get scared when I look at a chart and I see this. There is a reason, folks, why I don't freak out and I start to laugh and I have fun and I get greedy. This is the reason. I live for bounce plays. Bounce plays are my thing. That's what I do. It's that simple. Right? I like other types of trades as well. But I love the breakout trades. My scalping is just bounce plays on a shorter time frame predominantly. I love accumulation. Lots of money made in accumulation and stuff like that. But bounce plays are really, for me, bounce plays are I love bounce plays because I understand market behavior, right? Inertia, momentum, counterforce. Inertia, momentum, counterforce. Bounce plays are the counterforce. What goes up must come down. What gets slammed into the concrete must bounce up. I dare you to go find one crypto chart anywhere that that's not some coin that just got delisted, and show me anything that's had such a vicious sell-off that didn't have a dead cat bounce. Now, you have to time it. This is where, you're playing the illiquid markets. This is where your fib retracements come in handy, right? This is where your fib retracements come in handy, right? If you were trying to catch bounces up here on a descending triangle, then you're cruising for a bruising, because a descending triangle is a bearish pattern. I've seen so many clowns in the past few weeks, posting charts. Buy this market right now. Break out of this descending triangle. It's like descending triangles after a market has gone up 1,000,000,000% is a bearish breakdown distribution pattern. It doesn't mean that they can't recover. You're right. It can, but the chances of fake out are very, very high, in my opinion. Right? I saw a lot of triangles drawn on breakouts for Ripple. You're right, Greg. It's good to look at both sides. So Greg's saying, to their defense, descending triangles were breaking out to the upside like 80% of the time first half of the year. You're absolutely right. I completely agree with you. This was a descending triangle, and this broke out. So yes, you can get bullish breakouts. A descending triangle is only a bearish pattern if it's confirmed on the breakdown. Confirmation of the breakdown, right? However, when you see a market like Ripple that's gone up 4,000% in the span of a few months, the quality of the breakouts on the descending triangles are a lot weaker, right? And I know that I saw a lot of people on Twitter get faked out by this breakout, and it flopped, right? Let's look at and it flopped. So you can do it, but you have to manage risk. Do I take other considerations such as MACD and RSI into consideration for bounce plays? Yes, I do, predominantly for Bitcoin bounce plays, especially when the markets are highly correlated. The primo of Bitcoin. Check this out. Look at that. Stochastic RSI. This is my favorite momentum indicator. I scalp on this. I look at the larger trends on this. Look at that. Bam. Bam. Now, don't trade blindly just on the stochastic RSI. You need to look at other factors. It is one ingredient in a cake, right? It's one ingredient in a cake, essentially. That's really what it all comes down to. If you only put sugar in the cake, your cake's going to be terrible. You need to put some eggs in it, some sugar, some flour, whatever, right? Some chocolate, multiple ingredients. You put those ingredients together, and now you're creating, you're stacking up multiple levels of possibility and probability. One sec. So anytime, also want to point out, just to polish off this lesson, you know, sometimes I might buy dips and you know, get really close to the bottom, and you say, hey, what the heck did you do? How'd you do it? When I see, you know, first thing I do is I zoom out to the bigger picture, right? I look at the bigger picture, right? Kind of see what's going on. There was kind of interesting, the lines are dynamic, so there was kind of a support on this last line right here. So you have multiple different lines, and as they break down, it can retest different areas, different lines. So I saw that was that there's, you know, I noticed this one, right? And so that's my first starting point. High areas of probability, right? It doesn't always have to be perfect and exact, but high areas of probability, right? So that's the first step. Second step is I get down into the smaller time frame, so I'll look at it on the hourly. We'll look at the hourly. What's this called? This is called the double bottom. Right? Boom. Boom. And then you can get real cute, and you could say, hey, look, double bottom breakout. Right? Like if you're just a day trader, this is the kind of thing you would look for as a day trader. Right? In my case, I also like to have X-ray vision. In my case, I also like to have X-ray vision and get down on a really small time frame, especially for scalping. I'll scalp on the minute chart. Right? Anyways, and then I'll use a momentum indicator like stochastic RSI and stuff like that. I generally like the really big bounces. We did have a nice bounce play here and another little bounce play. Some couple scalps. So that's pretty much it. So I'll end this market update, but so this is basically a lesson on market update / lesson on you know, dip buying, how to manage risk with dip buying, and also just kind of a review of my current strategy and plan as far as, you know, moving forward with Bitcoin and altcoins and such. So that's it for now. Cheers.